Welcome to the weekly kickoff brought to you by themortgagereal.com for the week of June 22nd. All eyes will definitely be on the Federal Reserve and Big Ben Bernanke with his announcements on his federal meeting beginning tomorrow on the 23rd going through the 24th. Right now the stock market has built in already that sometime before the end of 2009, for the first time in 3 years since June 29th of 2006, that they'll probably increase the short-term interest rates. Now, what does this really mean to the mortgage world? With the increase in interest rates, that could potentially set off what could show as far as inflation. We all know that unfortunately inflation is very bad for bonds. That could have a very negative impact, sending interest rates on mortgages definitely higher. What we're really looking forward to in the mortgage world is seeing if Big Ben will make any further announcements about long-term treasuries, treasury auctions, and what's going to actually be happening moving forward if the Federal Reserve is going to extend their term or go to other financial securities to back the mortgage world. We all know right now that mortgages are technically on sale. We're on sale until the end of December 30th, 2009. Why are they on sale? Keep in mind the Federal Reserve is definitely backing the mortgage world. You take the Federal Reserve out, what happens to interest rates? We all have seen that with all of the bond rollovers that are happening right now, interest rates spiked within the last month. So what does that really mean for the long term? If they're on sale, we go to December 30th, and as we approach that end of year benchmark and the Federal Reserve starts to retract, that means we go to open market. If open market isn't favorable, interest rates will go up with inflation going up. Now, if the Federal Reserve makes any announcements tomorrow, we could see that very, very favorable to the mortgage world. So if you're either thinking about refinancing or purchasing, this could be the time. If you're on the fence about a purchase and you're in a purchase and sales agreement, this is the week to definitely keep in the ear as far as media. If you're thinking about refinancing, we all have waited. We all heard interest rates are going below 4.5%, going below 4%. It's pretty well assured now that that's not going to happen. What we're all waiting for is that one last period of time, whether it be a day, a week, maybe a couple weeks, for interest rates to go back below the 5% benchmark. Now that 5% benchmark has definitely been a floor of resistance for us in the mortgage world, and we're definitely going to test it over the next 48 hours. It is very, very critical. If you're looking to improve your cash flow position, lower your interest rate, refinance to pull cash out, refinance for any situation, this is the week to definitely stay in tune with the next events coming out until Friday. Now, there's really no other economic news coming out this week other than the personal consumption expenditures, which is due on Friday. Other than that, it's all based on the Federal Reserve. Big breaks are going to happen. We also see that oil's been coming down with the recent activities in the presidential election in Iran. That's having some favorable impacts on oil. Main thing to keep in mind, if you're waiting for the interest rate to go below 5%, this could be the week. And why we say it could be the week is because based on what Big Ben is going to say in his Federal Reserve meeting. We will make sure to keep you updated and posted. We'll definitely have a post on Wednesday based on what he says as far as inflation and if they're going to mention reinvesting even stronger in the mortgage-backed securities. We'll talk to you real soon.